Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, January 14th, 2026, and here is everything you need to know as the markets open for today. Wall Street overnight recap. Wall Street had a muted session yesterday, pulling back slightly from recent record highs. The Dow Jones dropped 0.8%, shedding roughly 400 points to close just below 49,200. The S&P 500 retreated about 0.2% to finish just under 6,970. And the Nasdaq Composite eased 0.1% to close near 23,710. The pullback came even as December consumer inflation printed at around 2.7% year-on-year, broadly in line with expectations and keeping hopes alive for rate cuts later this year. The real drag was in financials, led by JPMorgan Chase, which fell about 4% after reporting a weaker than expected quarter, with revenue and guidance disappointing the street, while Visa and other credit-related names also came under pressure. On the positive side, select technology and semiconductor stocks held up, with Alphabet and some chip names eking out modest gains, but overall risk appetite stayed cautious into the close. Indian ADR performance. Turning to Indian cues from the US, key Indian ADRs had a mixed night. Infosys ADR slipped to around 17.5, down about 1.5%, as global investors turned a bit cautious ahead of today's earnings announcement. HDFC Bank ADRs eased to nearly 33.2, lower by close to 1%, reflecting continued concerns over valuations and loan growth. ICICI Bank ADRs were relatively resilient, hovering near 31.2, with a flat to slightly positive close, suggesting stable overseas sentiment for the private lender. Reliance's GDR, traded as RIGD, fell to roughly 64.5, down almost 2%, mirroring the weakness in global energy and petrochemical names. For Indian investors, the tone from ADRs is mildly risk-off, with IT and financials signaling a soft start, but no signs of panic selling. Asian markets and Gift Nifty. In Asia, the latest available closing data show a mixed but constructive picture. Japan's Nikkei 225 ended its last session higher by around 0.8%, supported by a softer yen and optimism around export-focused names, as political chatter about potential early elections keeps policy expectations in focus. Hong Kong's Hang Seng index managed a gain of close to 1% at the previous close, helped by buying in technology and China-linked financials as investors hunted for value after a long stretch of underperformance. The Shanghai Composite, however, slipped roughly 0.6% at the close, with some profit-taking after its strong start to the year and lingering concerns over property and local government debt. For the early India read, Gift Nifty futures are trading just a shade below yesterday's close, hovering around the 25,700s, indicating a flat to mildly negative open for the Nifty 50, rather than a big gap in either direction. Overall, Asia is signaling consolidation rather than a clear trend, so local factors and results will likely drive today's intraday action. Key global news and geopolitics. On the global macro side, the key talking point remains the combination of steady US inflation and central bank signaling. The latest US consumer price data, running in the high 2% zone, keeps the Federal Reserve on track for possible rate cuts later in the year, but removes the urgency for aggressive easing, which is why equities are reacting more to earnings than to macro numbers right now. In geopolitics, oil traders are on edge after President Trump's fresh social media message hinting at a tougher stance on Iran, and even suggesting tariffs on countries doing business with Tehran, which has pushed crude prices higher on supply fears. Currency markets remain relatively stable, with the dollar off its recent peaks, and that's helping emerging market FX, including the rupee. But any escalation in the Middle East or fresh tariff rhetoric could quickly flip risk sentiment. Indian market headlines and pre-open cues. Back home, today is a big day for the Indian IT space, with Infosys set to report its third quarter numbers later in the day, followed by a management commentary that the street will dissect for clues on deal pipeline, pricing, and AI-led spending. Expectations are for moderate revenue growth and stable margins, but guidance for the next financial year and any commentary on US and European demand will be more important than the raw quarterly numbers. Alongside Infosys, several financial names and AMCs are also due to report, which could add stock-specific volatility in banks and asset managers. On the flows front, foreign investors have been net sellers so far this month, while domestic institutions continue to provide a strong counterbalance with steady buying in large caps, especially in banks and select industrials. Bank holidays for Makar Sankranti in a few states may slightly slow down on the ground activity, but market operations remain normal nationwide. Technical levels trading setups. From a technical standpoint, Nifty 50 closed the previous session just above 25,730, forming a candle with a long lower shadow that highlights strong buying interest near the 25,600 zone. For today, immediate support to watch sits around 25,600, with a deeper support pocket near 25,500 if that breaks on intraday volatility. On the upside, resistance is clustered in the 25,800 to 25,900 band, and a sustained move above 25,900 could open the door towards the psychological 26,000 mark. Bank Nifty has been relatively stronger, closing near 59,580 and holding above its key moving averages. Here, immediate support lies in the 59,300 region, with a broader flow closer to 59,000, while resistance is seen between 59,800 and 60,000. Price action around these zones, especially how the market behaves near 25,600 on Nifty and 59,300 on Bank Nifty, will likely define the intraday trend. Commodity market summary. In commodities, crude oil is back in focus, with the latest WTI futures quote around the low 60s per barrel, after a sharp move higher driven by those renewed Middle East worries and tariff talk. Higher crude, if sustained, tends to be a headwind for India's macro, but it also supports upstream oil and gas names and select energy heavyweights in the index. Gold is hovering close to record territory in dollar terms after its recent run-up, with mild profit booking capping fresh upside, but safe haven demand still very much intact. Silver has pulled back after a strong rally, suggesting traders are booking gains and waiting for fresh cues. For equity traders, the message from commodities is simple. Keep an eye on oil for macro risk and on gold as a barometer of global risk aversion. Actionable idea or day plan. Closing. Putting it all together, the setup for today's session is one of cautious consolidation. Global cues are slightly weak but not alarming, and the real trigger for India will be earnings, starting with Infosys and followed closely by banking and financial names over the next few days. For traders, this is a day to respect support and resistance zones rather than chase aggressive breakouts. Consider building positions gradually near support instead of entering late into sharp intraday moves, and keep position sizes moderate with stop losses clearly defined. Investors with a longer horizon can continue to focus on quality large caps and private banks, IT leaders, and domestic consumption stories, using any result-driven volatility as an opportunity to accumulate rather than panic. That's it from this morning's edition of What Will Move the Market. Stay tuned for the evening wrap, where we'll break down how Infosys and other key earnings actually landed, and send in your questions or topics you'd like covered. Subscribe to this podcast to hear US every weekday and stay one step ahead of the market.